Hello, everybody. Welcome back to another episode of the Climb Finance Show. My name is Kian Lynch, and we will be discussing investment markets, business news, and general finance on today's episode. We'd like to keep it short and sweet. Today, we will be discussing the Federal Reserve's interest rate announcement decision today and how it impacted stocks and other investments, all different types of financial instruments. So let's get into it. So, kicking off here with this quick article from CNBC talking about the Fed holding rates steady and maintaining 3 rate cuts coming sometime this year. This was a huge day. There was so much anxiety leading up to this. And ultimately, the Fed took a dovish stance, kind of leaning on what they've been saying since December, that interest rate cuts will be coming sometime this year. The reason why people had so much anxiety about this meeting today was because inflation has been still relatively high this year, above expectations. The last reading, I believe, was 2.6 versus a 2.4 expectation. So while the Fed has done a solid job of reducing inflation compared to last year, it's still certainly not where they want it to be. And so the question really becomes for Federal President Jerome Powell, do they need to tame inflation 100%, or do they need to help asset prices and the stock market? Obviously, the U.S. presidential election is coming up later this year, and he is receiving political pressure from both sides to keep stocks on a steady pace, as they are a lot of stock market indices are at all-time highs. So we're going to take a look in a quick second at specific investments and how they reacted to this meeting today, this announcement. But I just wanted to go through this very shortly. So they're keeping the rate at 5.25 to 5.5. Fed officials penciled in 3/4 percentage point cuts by the end of 2024, which is what investors wanted to hear. So obviously the rate has been relatively high or increased since the last couple of years to help bring down inflation. But, I wanted just to move over quickly to this this PDF release, Summary of Economic Projections, released by the Fed today, specifically this chart right here, what they call the dot plot. And these are all, votes, you could say, by the Federal Open Market Committee members projecting where they think the interest rate will be at the end of the year. And you can see for 2024, majority are expecting between 4.5 to 4.75, which would be 3 rate cuts from the current level. Some expected higher, some slightly higher, and one below. But generally, they're indicating a market, an interest rate cut, 3 this year. And that's exactly what people needed to hear. So if we take a look at some specific stocks here. So, for example, if we take a look at Apple, you can see at 2 o'clock Eastern or 8 o'clock UTC, Apple experienced a 2% jump. Similar here with the S&P 500. I mean, you point to it, so many different investments had a huge jump today once this announcement was released. Anything from the S&P 500, the Russell 2000s for small caps, all the larger cap stocks, anything from Microsoft to Amazon to Nvidia to Tesla. Cryptocurrencies also experienced a huge jump. And even gold had a large jump with this announcement. The reason why gold and Bitcoin would do well with the interest rate cut announcement being that gold and Bitcoin do not produce any yield, which makes them more attractive. Obviously, right now with interest rates around 5%, you're able to get that in a money market or savings account. But when they bring down the interest rate in those savings accounts decreases, which makes non-income producing assets like gold and Bitcoin slightly more attractive, as they tend to keep up with inflation while the dollar does not. If we take a look at the DXY, which measures the US dollar index, you can see this was the only thing that I've shown you that has decreased during the announcement, as when interest rates are lower, it makes less sense to hold that currency, because you're not going to be accessing those savings. Like when interest rates rise, the demand for that currency goes up because people want to deposit that currency and earn that interest rate. But when the rate goes down, it makes it less attractive, and that's what happened to the DXY today. So in summary, this has been great for stocks. I saw Tom Lee of Fundstrat said that he could see the Russell 2000 increasing by 50% this year, which would be stunning. So he has an eye on small caps. But gold and cryptocurrencies also had a solid reaction to today. So in general, I got to tip my cap to Jerome Powell. They keep talking about soft landing, and, knock on wood, but they have pulled it off to some extent. So anyway, thank you for joining me on today's episode. Keep it real out there.